I'm Ava Makina, and this is the Coin Daily. Stocks are making a real comeback, gold is catching a bid, and tech is breaking higher. But if you look to crypto, the majors barely flinch. Bitcoin and Ethereum are boxed in, staying glued inside their ranges, even as Wall Street's risk appetite heats up. Dig deeper, and you'll see almost every major coin is green. But that action is scattered and inconsistent. It's not a synchronized rally. It's a market where select names pop, others stall, and the majors keep waiting for direction. Tonight, we break down why crypto looks risk-on next to stocks but doesn't act like it, and what these split moves mean for the next breakout. With crypto majors in gridlock even as stocks rally, the spotlight turns to how the industry is building its connections to mainstream finance. Coinbase is front and center with a new regulatory milestone that could reshape how institutions get on board. Coinbase just got conditional approval from the Office of the Comptroller of the Currency, putting its custody business a step closer to being run as a federally supervised trust bank. This isn't a green light to become a full bank. Coinbase still can't take retail deposits or make loans. But it does mean a much cleaner setup for trust and custody services under one national set of rules. If completed, that's a real upgrade from relying on a patchwork of state-by-state rules, making it easier for big institutions to understand the regulatory landscape. But this is only conditional. Coinbase still needs to check boxes on governance, capital, and operational controls for the approval to go final. For investors, it's a signal that the regulatory pipelines connecting crypto and traditional finance are starting to form, even if there are a few more hurdles ahead before the system is truly switched on. So Coinbase moves closer to operating with the stature of a national trust bank. But in the here and now, the market isn't reacting. Crypto isn't rallying with the big news, and the majors still look trapped. That brings us to the macro story that's testing Bitcoin in real time. Bitcoin's reputation as a safe haven faces another reality check. Oil just shot above $110 on fresh supply fears, but while traditional safe havens see inflows, Bitcoin is holding close to 67,300 without much movement. This candlestick chart shows Bitcoin boxed between strong support at 66,486 and resistance at 67,450. Oil prices spike, but Bitcoin trades sideways inside this range, neither selling off nor breaking out. This flat tape tells the story. When global headlines hit, Bitcoin hasn't taken off as a defensive play. Instead, buyers and sellers keep it stuck in the same band, even as assets like gold get real flows. It's a reminder that crypto remains risk-on adjacent. The major breakout still needs confirmation above 67,450. Unless that level gives way, Bitcoin will stay in its own lane, disconnected from macro fireworks. And that leads to the bigger picture. In crypto right now, there's no single narrative. Just isolated moves. So each time Bitcoin's role as a haven gets tested, it circles back to the theme of uncertainty and mixed signals. But outside of price action, regulatory headlines still cast their own shadow. The biggest is the fate of America's crypto laws, now tangled up in election year politics. The US. Clarity. ACT is pitched as the bill to finally give Washington a clear answer on who regulates crypto, splitting responsibilities between the SEC and the CFTC. It passed the House, and the Senate has a similar draft, but everything hinges on timing. John Deaton, who represents XRP holders, points out the hard truth. As election season ramps up, complicated market bills get crowded out by political priorities. If Congress pivots into re-election mode without locking in a final calendar, bills like Clarity usually get punted into the following year. Until we see committee hearings or actual floor votes scheduled, all talk is just noise. What it means is this: the regulatory fog won't lift soon, and policy delays keep weighing on US crypto, from companies to investors. No quick relief is coming, only more waiting. With regulation on hold and major narratives drifting, the story returns to the tape itself. What's happening under the surface isn't uniform. Instead, the real action is isolated to a handful of coins and setups, driven by extreme differences between what's green and what's actually moving. Crypto's market tells two stories at once right now. Breadth is positive. 13 of 14 tracked names are up, but the spread between them is one of the widest this quarter. That's the hallmark of extreme dispersion. Some coins move hard, while majors barely budge. The result is a tape where green screens hide a market with big gaps and local breakouts, not a true rally across the board. And if you want a snapshot of that dispersion, put 5 big tickers side by side: BTC, ETH, Doge, DOT, and ADA. Even when the day's tape is mostly green, the gap between the leaders and the laggards can stay wide. That's the tell that we're not in a clean, broad risk-on melt-up. This is a market where rotation is violent and execution matters more than the headline index move. This explains how you can see a green board but still feel like nothing is really happening in the majors. Why is that? When volatility in Bitcoin and Ethereum sits at rock bottom, big money doesn't commit, and confirmation lags for anyone betting on broad risk-on. In these types of markets, most of the real movement comes from idiosyncratic trades. You get strong action in a few alts, but unless Bitcoin and Ethereum break out of their compressed ranges, there's no rising tide effect. The lesson is simple. Dispersion this extreme says to pick your spots. Broad exposure will just track the majors, while the real opportunity is in those isolated breakouts. Until that changes, it's a trader's market, not an investor's. Extreme dispersion means the winners stand out even more. Avalanche is the clearest example, showing price leadership, but the action beneath the surface is far less straightforward. Let's look at what's powering the move and what could trip it up. Avalanche has reclaimed support right at $9, with the last candle closing just above that level. Pushing up from what's been resistance into a possible new floor looks bullish. But with this market structure, the real question is whether the breakout is sturdy or sitting on thin ice. Avalanche's candlestick chart shows price reclaiming support at $8.85 and then pressing higher toward resistance at $9.12. The latest close is just over 9, spotlighting this reclaimed zone right on the technical map. But as always, the look of the price move is only one side. The deeper test is whether buyers are actually stepping in or just chasing a thin rally. It's the funding and positioning data that answer that question. Funding for Avalanche is high at 8.1% annualized, with open interest at $70.5 million and down 1.65% on the day. That means longs are paying a premium, but overall, bets are actually shrinking. This is the exact kind of setup where trend can reverse fast. Positive funding with falling open interest says the run is thin, a spot-led rally without new money joining via derivatives. Even more, the execution spread stays wide, so every move costs more and liquidity stays thin. If Avalanche fails to hold above 9, especially 9.02, the bullish story unravels, and the next real support is back down at 8.85. But as long as it sits above 9 and funding remains positive, there's still a shot at pressing up against 9.12 resistance. In markets like this, every dollar of participation counts. While Avalanche stands out for its move, the opposite story is playing out in the majors. Ethereum, in particular, is stuck in the slow lane, lagging while traditional markets rebound and still boxed in below resistance. Ethereum is caught at the bottom of a tight box, support at 2048, resistance up at 2065. Even as stocks and gold make obvious progress, Ethereum can't break free. The more time it spends stuck here, the higher the risk that this lag cements, and the less likely it joins the next wave if the risk rally accelerates. Ethereum's candlesticks are squeezed tightly between 2048 and 2065. The latest close lands at 2054.75, basically dead center in the range, showing how little progress has been made. Now zoom out for the macro crosscheck. Stocks and gold have been able to bounce, but crypto majors are acting like they're stuck in first gear. ETH is the clean example. It's moving, but it's not breaking. And that's where a simple regime read helps. Because in a low volatility environment, price can look calm even when conviction is thin. Ethereum's positioning gauge shows a funding rate at just under 0.5% annualized, open interest around 4.4 billion, and down 0.8% in the past day. That's low conviction. Traders are hesitant and not betting fresh capital on a breakout. The message for Ethereum is stark. It needs a sustained break and close above 2065, confirmed by at least steady or rising open interest, to join the risk party. Failing that, a clean loss of 2048 would reinforce the weak link narrative and could drag the market further. Until one of those levels gives way, it's a dead spot. Every day spent boxed in is another session the rebound passes Ethereum by, and the pressure quietly builds. Watch those two price levels. They are the next triggers. When majors get stuck, sometimes a single name flips its character quickly. AAVE has gone from support to active resistance, and what comes next depends on whether it can regain its lost ground. AAVE's setup is as clean as it gets for a level flip. 94.76 was reliable support, and now it sits just above as resistance. The market's question is straightforward. Can AAVE reclaim that zone and turn a breakdown into a base, or does the rejection stick and deepen? On the candlestick chart, AAVE trades in a narrow channel, support down at 94.10, resistance at 95.80. The most recent candle closed at 94.61, stuck below the key reversal level at 94.76. But as with all these stalled setups, the real answer comes from positioning. Whether new bets show up to give the next move legs, or if fading interest solidifies the rejection. AAVE's open interest is 36.6 million and down more than 1.5% today. Funding is positive at 5.3% annualized. That doesn't scream a squeeze or panic, just a market with fading participation. AAVE's test is right in the price levels. If it can't reclaim and close above 94.76, especially as open interest slides, the ceiling hardens and every retest loses power. Strong confirmation only comes if price decisively moves back over that resistance and open interest at least stabilizes. On the downside, watch for a move below 94.10 to reinforce the breakdown. For now, this is a classic coin flip zone, and the next move outside this band will decide whether AAVE's failed support becomes a real barrier or just a temporary detour. So, across the tape, the verdict is clear. Stocks are trending and gold is steady, but crypto sits in a strange risk-on purgatory. Majors like Bitcoin and Ethereum remain boxed in, waiting for their move. While opportunity comes from isolated pockets like Avalanche and from clean level flips in names like AAVE, dispersion is high, breadth is positive, but conviction sits on the sidelines until something gives in the majors. This is exactly what risk-on adjacent looks like. The playbook is local breakouts, not a broad rally. The big question for tomorrow: do the leaders finally break their boxes, or does another outlier make the next big move? Which level will break first? Bitcoin's resistance, Ethereum's box, or will it be an outlier altcoin that surprises the majors? If today's roundup helped you make sense of the market, hit subscribe and turn on notifications. We're here every day.